Check, check, quick sound check. Can everybody hear us loud and clear? Hear me loud and clear. Coach Paul should be here in just a minute. Welcome, welcome everybody to At the Buzzer. Let's get a quick sound check. I think we should be good to go. Welcome everyone to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a Topstep performance coach since June of 2023. Coach Paul is going to be joining in just a little bit here, but let's get into it. Let us know how you did today. Were you up on the day, down on the day, anything that you learned from the day? Westy says I need to change that picture. I'm going to send a new picture into the to our creative team and see if they can update that picture for me. I look pretty young in that picture, so kind of want to keep it, but we'll get another one. We will get another one. Let's just jump right into it. Great day for ICT sniper skills. Nice job. Green day for Courtney. Passed the combine for Louis. Good job, everybody. Good job. We are getting closer to the end of the government shutdown, it sounds like. It passed through Senate. Needs to still go to a vote, I believe. And then the House is going to vote on it. But it does sound like we are getting closer to ending the longest ever government shutdown. Do the markets like that? Not like it? We will see. Pretty interesting day. Two-sided trading day today. Yeah, JD, closer, right, in quotations. I'll believe it when I see it. But they grabbed that picture from high school. Yeah, that picture was actually 2 years ago. It was actually 2 years ago. Well, I guess I looked a lot younger then. But yeah, closer to the government shutdown. Outside of that, no real news. We do know that once we get the government back started up again, we'll get a ton of economic data. We were talking about it during the opening call. There's still 2 NFP prints that we didn't get. There's 2 CPI prints that we didn't get, a PCE print, a PPI print as well. So a ton of data that we're just kind of sitting on here. I'm curious to see how we get the data released because it is 2 months of data that we have not gotten. And we know there is still a Fed rate decision at the end of the year. 2 years of dealing with Topstep chat will age you. No, you guys keep me young here. All right, let's get into the markets. There are 36 different markets we can trade with Topstep accounts. And today to the downside, we had the 10-year down 0.19%. Sorry, let me check that again. Yeah, so 10-year, the Ultra Notes down 1.9%. These are some markets that we normally don't see in the biggest percentage movers to the downside, which means there wasn't a lot of movement to the downside. Ultra Notes down 0.18%. We have the 10-year note down 0.18%, and the Japanese yen, our biggest percentage mover to the downside, down 0.33%. To the upside, we have platinum up 3.19%, lean hogs up 4.03%, and silver, our biggest percentage mover to the upside, silver back above $50. Silver up 4.78% on the day. You guys remember we've been talking about this this range that the metals have been in, kind of bouncing between the 20 and 50 moving averages. Silver finally broke out of that today. Gold did as well, and we'll take a look at gold in just a little bit. To talk about our big four, we have crude oil up 0.65%, the S&P up 1.6%, gold up 2.76%, and the NASDAQ, our biggest percentage mover to the upside, up 2.26% on the day. I'm going to pull up a NASDAQ chart. Let's take a look at the daily to start. And we talked about this Friday, but we talked about it during the opening call as well. We got what looks like a healthy pullback in the equity markets. We had that gap up 2 weeks ago, and we stayed, we made new all-time highs, stayed pretty range bound. I think this pullback was kind of necessary. We pulled back to the 20 and 50-day moving averages. And to me, more importantly, we pulled back to 50% of this October 10th range. That was Friday. We saw that rejection. Buyers stepped in right around that 50% range in the equities, popped us right back up. And where we opened today was right above those, or right near those highs. 25,388 was the high of that daily candle. 25,388 was the high of that daily candle. So On the daily, we're back above the 20-day moving average. 25,508 is that price. We're 200 points above that, and we could be talking about government shutdown coming to an end and all-time highs pretty soon. We're less than 3% off the all-time high in the NASDAQ, just over 2.5%. And this market looks extremely bullish. Let's take a look now at the 30-minute chart. On the 30, I'm going to take these moving averages off of here. We'll just leave the 200. On the 30 here, we opened up below the 200 moving average inside that October 10th range. We didn't really get a ton of urgency early on. We had price leave the 30-minute range after about an hour, about 2 hours or so. Volume took a little while to catch up. But one thing we talked about during the opening call was when we're doing the opening call, the price looks like this, right? So with Hogan, Amanda, everybody's talking about, how do we get in long here? And that 200 moving average, to me, is the opportunity, right? If we get a pullback into that 200 moving average, that's the opportunity to buy. Now, the question is, can you be patient enough to wait for the market to get down there? 25,484 was that price. And sometimes what happens is, as traders, we measure something, the market does something else, and then we kind of, adjust the game plan. If you look at it early on, VWAP was pulled above that 200 moving average right on the open. And we got that immediate spike up where it could feel like, oh man, I was measuring maybe that 200 moving average, but the market went without me. But this is where I would try to remind myself all the time of, if you measure something, be patient. And if the market gives it to you, great. If it doesn't, then it's not your trade. Because we came right back down to that 200 moving average. We held it. You were able to get a better price than the average, right? VWAP's up here at this point, 25,550s. The 200 moving average is about 70 points lower than that. And if you wait for an opportunity for the market to test that, we didn't trade. We traded maybe 40 points lower than it. If we go with the Coach Paul suggestion of 2 ATRs on whatever time frame you want to take the trade, it turned out to be a pretty good trade. 484 was that 200 moving average. And if I took it on the 3-minute, 2 ATRs would have been a 45-point stop. My stop's way down here for a pretty good trade. Now, you had to be patient and wait for this. The opening range trade looked like, it wasn't going to pull back at all. It looked like we were just going to go. And if you took this trade, nice trade, right? Looking at the opening range, we left that range to the upside, volume left to the upside as well, but we got kind of thin up here. And in these 650s, we saw a ton of size trading. If you were watching TopstepTV, watching Fast Markets, you would have heard Andre and Jack talking about, hey, there was a 500 lot just got filled in the NASDAQ, a 200 lot just got filled in the NASDAQ. Those orders a lot of times lead to pullbacks. I see Coach Paul in the green room, so let me bring him in here in just a second. Maui Man says 10:40:35, everything changed. 5-second huge volume trade. Yeah, we'll take a look at that. 10:40 Central Time you're talking about. We'll definitely take a look at that. Let me get Coach Paul in here. Coach Paul, let me know when you're good to go. Coach Paul, let me know when you're good to go. All right, sounds good. We got Coach Paul in the green room. He's almost set. All right, sounds good. 1 second here. Let's get Coach Paul in here. What's going on, Coach Paul? How we doing?
I'm late. I was caught in a meeting.
All good. I'm getting a little bit of an echo on your side, but I think we should be good now.
All right, how about now?
We're good. We're good.
All right.
We are good to go. All right. So we were going over, Coach Paul, let me share the charts with you also. Going over the NASDAQ for the day. That white line again, it does it again, man. Very nice pullback to the 200 moving average in the NASDAQ. It required a little bit of patience to take it, but we saw some size trade up at these 650s that told us there was potential for a pullback here. And that's exactly what we got. Pullback to where? That 200 moving average. Dakota was looking to get in short up here. Got stopped out. Had the direction right initially, but unfortunately stopped out. Shout out to Braden looking to short at these lows here. But held on to that 200 moving average and a really nice rally. I'm extremely bullish this market, Coach Paul. I don't know about you, but how are you looking at the equity markets right now?
Well, if we look at the daily, we had the test of the 20 and the 50. We talked about this Friday. It held at 50 and got above the 20 again. Short-term trend line from the top, we're right there. And up and to the right again. Like we talked many times, I'm really never comfortable getting short stocks for too long. It's designed to go up, and when it goes up a lot faster than it goes down. So yeah, I'm with you on that.
Yeah,
To me, that was the correction.
absolutely. Let's take a look then at the shorter time frame. We'll go to what Maui Man is talking about here. So yeah, we had the initial push on the opening range. That was a great trade, right? 140 points to the upside, but it got a little extended from volume there. And when we pulled back into that 200 moving average, eventually we saw a spike of volume. I'm not going to pull up the quant hour charts here, but let's take a look. It was, yeah, Coach Paul, I'm getting a little bit of an echo from you.
Let me try my headset.
All right. This spike of volume right here. So 11:40 Eastern time, 10:40 Central time. Big spike of volume that shows up as a tape bomb. If you're watching Topstep TV and you're like, hey, we just ran some lows, this is like a run of stops here, and there's a passive bid somewhere sitting here absorbing all the selling that comes in. And Maui Man, shout out to you using the 5-second chart, but that set the low for the day, right? That's what we define as a J trade. We normally don't look at it on a 5-second chart, but that volume was, what was that? 1,000 contracts traded in a 5-second period, and we did not make a new low from that point. Pushes into 25 450s, doesn't trade 450, 452 even was the low at that point. And just a really nice grind up from that point. I know I was looking for the 800s, kind of ran out of time maybe, but almost a 300-point rally from that exhaustive selling at the lows, which is a really nice trade. Now, do you trade a 3-minute, 5-second chart to get it? Maybe, maybe not, but even on a 3-minute, we can see there was a decent amount of volume, right? That 3-minute candle was higher than the average, just absorbed any selling. Again, couldn't trade into 450s, and a really nice rally from that point. We saw a similar story here in the S&P. One of the things I want to pull up on the S&P chart, that 200 moving average, again, near the lows of the session, we had volume trading above it, which tells us that, the market may be mispriced if it's trading below that VWAP above the 200 moving average. This is an opportunity to get in long near that 200 moving average. And again, we had that high volume at the lows. Once we get that reversal below 6,800, right? 6,800 major psych level. Anyone who's trading the S&P knows when it trades 6,800. And then if we look at what happened when we traded 6,800, that flow to the downside stopped, Coach Paul.
Yes, it did. The price didn't. But you notice one thing that earlier today, it was away from VWAP, the session VWAP.
Yep.
So we had early buyers, probably, to me, it was more a short covering with volume. Once that stopped, we go back and we test it. And it was not an easy trade on either side if you're not patient. These are days where I used to get wrecked.
Yeah.
Even if you sold it early, you probably got stopped out, or then you turn around and get short, get stopped out again. But just watching, I mean, here we had 200 was a nice 200 on a daily was a really nice support. But we don't trade the daily. We trade day trade. So two things that I was watching is because these were very large ranges. That gap up and run last night. Now we were what, 75, 80 higher right after the opening. And right on the opening was, it was tempted to sell. Matter of fact, it had on the 5-minute, it had a breakout.
Yeah.
of the opening range with volume.
Yes, it did.
Now, did it get to 2-1?
This
I don't
trade
think it
did
did.
not. I don't think it did. I do not think it did. I don't think you got to a 1-to-1. That flow definitely just died out at the highs there. Well, it did. I don't know if it really. I don't want to say it died out because what we saw was just some absorption. There were some bigger orders up there that did get filled, and we've talked about how some of these bigger orders might tell us that a pullback is necessary before the next leg up, and that's today felt like an accumulation day because we're going higher, in my opinion. And
Yeah,
it just wasn't money time yet.
which to me, it has the DNA of stop losses.
Mm,
Because look how far we came from Friday's low in a short amount of time
right.
to the open. It was a large movement, and so it doesn't just go straight up. Which I mean, that to me was that's where the stops came. Like, all right, we got to get out. Larger shorts. But even an easy day to lose money because it traded both sides. I mean, on those lows, it looked like it was going to go and fill the gap. One
Yeah,
thing
it
that
did.
helped, that's been helping me is the volume profile
Right.
from last night. If we watch the volume profile, see the volume point of control, it gives you an idea of the whole day, the whole session. When it failed that volume profile after the opening, I took my loss. I was long.
Okay.
But
It
when it
held the
came,
point of control initially, and for a really nice spike. But like we said, it got a little too extended. The S&P was up about 1.25%. The Nasdaq was up about a 1.5%. And the question is, do we? Yes, the market is bullish, but do we see a pullback before we continue higher? And that's kind of what we got. So nice cut on that trade.
yeah, and we didn't. I thought we would. I can't. I thought it was a very good probability we would go and fill the gap. And I think I wasn't the only one.
No, not at all. I know there were some people shorting down here for it, but that flow stopped, like we said, right at those 6,800s, held up pretty nicely and making new highs on the day.
Yeah,
We are
that's why
less than 2% off the all-time high in the S&P. We could be there tomorrow, which is crazy. Or we couldn't. We'll see. We'll see what the market decides to present to us. But
yeah, because I don't know. The moment I start thinking I know, I become reckless.
absolutely. We got some questions in the chat here. Genius Monkey, Coach, if it rejects value area, if value area high rejects, usually it comes down to value area low. Do you think it's a better entry or point of control is better in your opinion? My answer there is going to say it depends. I would say if volume is flat for the day, then value area low is probably a better entry. I don't use the volume profile too much for trade entries. I use it more so, exactly like what Coach Paul was just talking about here. Seeing how I actually don't even use the volume profile once the day starts. I'm only looking at the overnight. But the answer is it depends. Unfortunately, but what would you say, Coach Paul?
I'll add to you right there. It depends on what your trading point of view is and how you trade and how you use it. I'm using it against the 200 moving average. And so volume point of control, we close under it. We close under but we're still above the 200. Now I was long. It didn't get to my 2 ATR stop. And sometimes you don't have to wait for it. That's pretty important to me at that point. That I probably wasn't the only long. It's like that to me has got that's a stop run. Let's see let's see if it's in strong hands. But I was done. I didn't get short. I didn't want to get short. So from my perspective, I get long if it closes back above the volume point of control. And what was interesting, the volume point of control and that opening VWAP converged. And when we got over it, that was a big move. That's where the real buying came. And it was really kind of on that half an hour, we had a J trade.
Yes, we did.
So
I want to check something here. Let me make sure this still works. And hopefully when I do this, I'm not calling the high, but I just want to make sure. I want to make sure that air horn still works. That might have just called the high of the market there, but we'll see. Just make sure there's still some air in that thing, because I think we're going to hit all-time highs pretty soon in these equity markets. And yes, there's still air in the air horn. Yeah, we got that J trade off the lows here on the 30-minute. We closed above that candle high, and it was off to the races from there. That point of control then flipped higher, and we just kept trading higher. Now, there's a question in the chat: is there a possibility that we sell off on the open? Yeah, 100%. There's a possibility for anything to happen. But with the market getting back above this 200 moving average on the 30-minute, closing above the daily 20 moving average, for me personally, I'm going to have reasonable expectations. If I get into a short, I'm looking for opportunities to buy this market. But that does not mean that it can't change by tomorrow. We had one more question here from Fuego. Can you give a quick crash course on ATR and what moving averages you're using? You said EMAs there. These are SMAs, simple moving averages. You can use EMAs. There's no right or wrong. I got to give credit to Coach Paul, who's sitting here, for using the simple moving averages. But what you're looking at, the gold one is the 20, the purple one is the 50, the white one is the 200. And for me, and I want to get Coach Paul's opinion on this as well, I'm looking at these on the daily and the 30 to try to determine the trend. Do I take trades solely off of the moving averages? I don't, but I want to see the market's reaction to them. And then, judging the market's reaction, what I'm using is VWAP, right? So in this case, I'm looking really at that 200 moving average on the 30-minute. We have VWAP, which to me is the market, trading above that 200 moving average, which tells me that the market is done trading lower prices. So what I'm looking for is an opportunity to get into the trend because we're above this 200. We can see, some days prior where we had price trade up to the 200, volume was below. So this is telling me, this whole picture right here tells me find a space to get short. Now, what the trade is throughout the day, it depends. But this trade right here, where a rejection of that price, volume below, tells me look for an opportunity to get short. We can see the inverse here, volumes above, price trades into it and doesn't trade lower. This is saying look for an opportunity to get in long. That's a quick crash course. Can it be more nuanced than that? It can be. Does it have to be? Doesn't have to be.
You can make it as complicated as you want.
You can, yeah.
But it's for it's for information. What information we get? Well, a trend today. Look at last night. We gapped open. Where did we find resistance initially? Around the 200.
Yep.
So I actually last night took a short, risked $100 on a micro. Went to sleep. I'm like, I got to get some sleep. But this morning, sometime in Europe, we closed above the 200. And look, when we, from my experience, 200, especially after we had a break like this, it isn't just magically buy it. There's always risk. But remember, we get fragmented information all the time. So as we get more information, to me, two things was, okay, I want to see what we do in the first 3 minutes. So I bought it up there, lost money twice. Trying, I don't, but I limited my loss. I want to wait for some more information. And that information came when we went towards the 200 later after the opening. And then we closed back above the volume point of control. What I've learned today is I didn't watch for a J trader selling exhaustion. I could have gained 20 points there, I think.
Yeah.
To me, that's more important. That was it. So we go down and so now I'm getting more information. We never have complete information. Truly, that's why we rely on a setup or a plan, and we let the market trade. We don't try and get the perfect trade. I don't know. I've traded 40 years. I'd say far less than 5% if I ever put on a trade where it went right away. It was easy.
Yeah. Doesn't happen too often. I had one the other day, actually. My entry was pretty much the top tick, but I didn't bottom tick the exit. So yeah, it is like you said, less than 5%.
Yeah, it's kind of an accident. But
right.
But what I want to say is when we look at after the day goes by, it's less fragmented. All the players are coming in. Now we have more information. We can make better decisions, not perfect decisions. So right there, I always look for that. Now on a swing trade, you buy that 200 over it, put a 2 ATR stop, and say close below it.
Yeah.
Or hit my 2 ATR stop.
And in this case, 2 ATRs from here, 22 points. It could be a while. We do see that too, and it could be tomorrow. Who knows? But we do see that 200 moving average hold pretty well once we either cross above or below it. We can see once we cross below it, we've been under it for a little while. All right.
Yeah, that's in a day trade. We have to be more patient. We have to take good trades. Good trade is taking a good loss. I don't hear that too often, but
right.
A good trade is taking a good loss. Which I did twice, and I was up a little on the day. I'm happy with that.
Another put this in the dictionary for what is that white line? That is the 200 moving average on the 30-minute. That's the Russell. We'll take a look at the Dow. A little bit more of a mixed story, but you can see, even in this case, this is volume traded above that 200 moving average. This to me, every time I see this and what happened in the equities today, is a reminder that you don't have to. Honestly, when people try to define what type of trader they are, I'm not a breakout trader. I don't love trading breakouts. But I really like when the market proves that it has the potential to trade higher and then gives me a better price. And it takes extreme patience to trade that way. Some days that you have the patience and some days you don't. But when you do, I started re-listening to Unknown Market Wizards and Emrit Saul. I listened to his chapter twice this weekend. And he said, his goal is just to take out all of the marginal trades in between the ones that pay really well. And when I look at this and I see volume above the 200 moving average, which is a level that I want to trade, this tells me wait because a better trade opportunity is coming and it's somewhere down here. And I'm not trying to figure out how to bottom tick this, right? But there's a better trade somewhere below the average is what I try to remind myself. And it happened in every equity market today for the most part. Coach Jay, why do you use the 200 moving average? Because of that guy right there. Yeah.
And why do I use the 200? Well, a lot of large funds use the 200. The 200 doesn't whipsaw as much. The shorter term ones, and it gives an overall larger direction. And we see it work, or we see it come up a lot. Work, I won't say they were, but
Nothing works.
It means something. Because it's not, it takes a lot of data. It's not you don't get his whips on you. By the way, this isn't trading advice.
No guarantees.
It gives me an idea of what side I want to take. Well, last night I took the sell side against the 200. I lost $100 on a micro. That was the price of entry. So it gives me an idea of the trend, and it's that simple. Now there's a guy named Paul Tudor Jones who uses it, and if he's using it,
it's good enough for me. Good enough for him. It's good enough for me. JD in the chat says use it because it's lucky. Sometimes it feels like that. Let's take a look at gold. We'll start with the daily on gold. It held up really, really well here. Good job, gold market. To all of our gold bears, we had that VWAP from the breakout, and that was attached to September 2nd. That was the day we broke out of that 3-month consolidation. Now, is gold in the clear? Are we going to make the run? What I do want to remember is that, and we talked about this looking very similar to what happened in April, where we had that blow off top. We made a new all-time high. We traded under the 200, under the 20-day moving average, between the 20 and the 50. And this candle that made the all-time high, we rejected 50% of that candle 1, 2, 3, 4.
7 times, I think it was.
Yeah, 7 times. So I'm not ready to say that we are going to go make all-time highs yet. Gold has, to me, a lot of work to do. Today was a good start. I'm looking at 50% of the October 21st candle. That was the most significant price action candle that we had. It wasn't the candle that made the all-time high. That was October 17th. But, this significant price action to the downside, that was, at one point a 7% down day in gold. 20 moving average is right at that low. We closed inside that range today. This is the first attempt at recovery in this market. Now, this 42, 43 area up here, we are about a daily ATR off of it, just under 3%. The market's response to this area is going to tell me a lot, but nice start here, gold. Held up pretty well. What are you seeing here on the daily, Coach Paul?
Exactly what you're saying. So now, looking at that, which, like you said, we have a lot of work to do. Now, to me, the range would be the high from after that big candle break, those 2 highs, the day after.
Yeah. Go here. Yeah.
So, or the 50%, but man, what a beautiful trade that was last night. Man, I mean, you can't. So let's look at, we had urgency.
And if you're wondering what we're defining as urgency, that is, we in the overnight session, we're going to mark out the first 30-minute of the market open. You can use the 3-minute as well. You can use a 1-minute, 15-minute, use whatever you want. But we like to look at that 30-minute, just gives the market a little bit more time to establish some data. But I mean, urgency is VWAP leaving that range as quickly as possible. And in this case, it took 2 hours, and we can see when that volume came in for the Shanghai session open. They said, all right, let's go. And we did not look back once. We came back, tested VWAP a couple of times, but this was a one-directional market, almost 100 points, 120 points to the upside. you know,
What can you say? We've seen this set up before.
yes, we have.
Many different markets. They wanted it, and price. One of the things that held me back a long time is price. Well, hell, it's $15 higher if I buy it here. I got too much risk, right? If we're just thinking price, but value with using volume. That is such a great enhancement. Why? Because my personal feeling of value and price is just what I said, it's personal. The market with volume will tell you, hey, okay, buy more. So buy high. This was with these urgencies, it's kind of, it takes us away from the buy low, sell high, and says buy high, sell higher. Why? Because that's the structure of the market, not because I'm being a smart ass. And I can be every now and then.
It's okay.
But seriously, that's hard to do if you're just tied to price. And that will hold you back. Now, what you would just buy it blindly? Well, you got to measure the risk, and I'm going to hand it off to you because I see you're going right there.
So the Shanghai session open is right here, 8 p.m. Eastern time, 7 p.m. Central. That time did move back, but what I'm framing out here is this highest volume candle, and that might have been, yeah, that was the highest volume 3-minute candle we had outside of the close in gold. And the reason I'm framing this candle out is because a lot of times what we'll look at, and we don't get to see the market like this, obviously, right? We get to see this at the close, but if you frame this candle out, one of the things that we look at is considering whenever the volume comes in, the open for the day. Now, if I look at this 3-minute candle, if I go with that mindset, right, whenever that highest volume comes in for the day, that's the open. This is just an opening range break to the upside. We didn't get that urgency right away, but what we did do is hold this trigger, right? There's a ton of volume that came in here, and we held the low of it, where if we did take this as an opening range breakout trade, stop goes below the low. It's about 13 points. That could be pretty expensive, but you could trade micros as well.
It's $130.
$130, and you got your 2-to-1 trade, and that's on high volume. So a lot of times what will happen, Coach Paul, is we get this volume spike here, and then we start to immediately look for, okay, where's the J trade, right? Where's the reversal? One of the things that we've said with that trade is you can preempt it, but if you preempted this one, you were wrong, right? What is confirmation of that candle high? Because I saw some traders talking about this, right? It happened at 40.50. Saw some traders talking in the slow markets chat about this. We never even tested the low of that candle, right? We never traded price below it. But to confirm this as a reversal, we have to close below this. And if we close below it at these highs, then this is a great short I'm looking for. But the flow was to the upside, and this was a case of high volume sometimes means continuation. We got a nice little pullback from that high, and maybe I'm not trying to buy this high, but this one just held really well. Look at VWAP. VWAP ultimately leaves that range as well, and just really nice flow to the upside. A couple perfect
Wait. Coach, time out.
What's
Go
up?
back to where you just were.
Right here?
And move that chart all the way to the right. This is a perspective.
Okay.
Blow that up. That looks like it's a huge move. It can't continue.
Right. Yeah.
This
that's what it looks
why
like.
I want to go back to that. If it just looked at a price,
Mm-hmm.
you might even want to fade that blindly on price. And this is where markets today are different than they were when I first started. That price would get traded around. It's immediate now. It's just like, they're not waiting for a rotation on something like this. If it was going to end, like we talk, it would be a J trade.
Yep.
Always has that. But you just said, this is why just price alone. I mean, this thing is just getting started.
Yeah, for the day it is. And you could very easily look at this and say, I can't buy this market. And a lot of times what we do is we look at it as how far it's come. And I think, well, invalidation is it has to be all the way down here. It really doesn't have to be, right? You might have to find something to say, okay, here's a level of invalidation in this trade. And in this case, to me, it's okay, if we break below the low of the highest volume candle, then this trade is wrong. But until then, it could be a scary trade to buy. And that's why for me, so if I know that this becomes my point of invalidation on any longs, Coach Paul, or at least on this one idea, if I know my point of invalidation is here, and maybe I don't want to buy it up here, if we get a pullback somewhere near 50%, this just reduces my risk. But again, my stop, just because I reduce my risk here, my stop doesn't automatically go down here. And maybe I don't set it directly at the low tick, but I can improve my trade location on a market that does feel like, this would be buying high of the days. This is why we say don't swim in front of the shark, right? The shark created this volume here. We get a pullback, and all they gave us was, a $13 pullback, $15 pullback before an opportunity to get in long. But the invalidation point is really about $2 here. It doesn't have to be the whole $50 move that we had. And man, just a really nice move up there in gold.
Like I said, so perspective. I want to really push that perspective. Like that, how we look back at that, it was just a little candle in the wind.
Yeah. Yeah. I mean, really what we did was we saw some volume above the prior day's high, right? That could have been some stops going off initially, but those buyers sustained. And Courtney makes a great point. It was urgency from the Globex open, right? This is not a market that opened up flat. It was already showing that buyers are coming in, and then we get a session open, which is that Shanghai session open where more buying comes in. That just, it's the same thing we do for the New York session, right? This morning we said, does the volume for the New York session agree with the move and just continue to push us higher? Or do they need to see price pull back before getting in long? And in this case, they needed that pullback before getting it up, before ultimately buying it, just looking for some better prices. So really nice move there in gold. Again, we'll see what happens. Still some work to do. Shanghai came in and bought it this last night. Let's see if they do the same thing tonight. I saw a question here. How do you anchor VWAP? In the drawing tools on your chart, on the left side here, 5 icons down, you have projection tools. You can scroll down halfway through that menu. You have anchored VWAP. Put a star next to it because you're going to use it all the time. And then it's just 2 candles with a line going through it icon. You click on that and then click on a candle, and that anchors VWAP for you there. All right. Did either of you coaches take any metals last night? Courtney, I actually took a short right at the prior day high, and I got stopped out immediately. And then I stopped trading it. I was looking at that prior day high. I was looking at the prior day high. Volume stopped. Volume was below it. So I took a short, looking for a trade back into VWAP. Stopped me out immediately, and I said, okay, I'm good. I was more so looking for it to maybe stay in that range, and it didn't do it. So I'm okay being wrong.
I didn't take good. I was trading micro S&P, and I was busy. I'm out of town, so I took the one trade that I saw.
Nice.
But am I kicking myself? Well, I can't because, but I would.
Yeah.
There was. By the way, there was plenty of opportunity. Actually, yeah, I wish I would have taken it. Yeah, but if I wasn't even looking, I would be honest, I wasn't even looking at it.
Coach Paul, you talked about good losses. I'm very happy to have taken my loss.
Okay, let's go deeper into that, because one of as a coach for a long time, and you've been a coach for a while, you just said it was a great loss. Where we can get caught, especially if a newer trader, is I got to get that back. And usually it's going to sell it again.
Yeah, right.
Just staying out of that trouble right there. It's like, okay, that's a good loss. I didn't see it right. I'm out. That's the discipline we talk about, being disciplined.
Yeah. Too often we compound mistakes.
Yeah, and a mistake it doesn't necessarily mean a loss. That's
Right.
what I really want to make the key point here. You take good loss. That's a good trade. Like, it's only a flesh wound.
Mm-hmm.
And didn't get my arm cut off.
Right.
So,
Yair just said, how do you anchor view up? Just answer that one. Just rewind just a little bit. We just talked about that one. All right. Crude oil. Sounds good. That's what we got in crude. 20-day moving average still acting like a support. 59.55 is that price. This is dollar range. You got much you want to say about crude?
Yeah, there was a J trade. No, almost, but there was small opportunity. It's not the ideal market to be in. Now, we had some urgency last night.
Yep.
Did it get 2-1? Possibly, but if you bought it early, it was, but it doesn't. Here's the key: is why it's so frustrating. It doesn't follow through on either side. Either side.
If you are looking for a breakout trade in crude oil, you're having a tough time right now. But if you look for opportunities to fade the extremes of the range, that's the trade. But yeah, looking for a breakout here, like Coach Paul just said, it is not sustaining in either direction. 60.50s down to 59.50. Honestly, this is not financial advice. You could buy it at 59.50, set a dollar stop, and just take whatever profit the market is willing to give you, and then sell it at 60.50 again. That is not financial advice. That is not a trading strategy. But look at this thing.
Let's look at it.
Let's look at daily natural gas.
Yeah, natural gas was it.
Here's the daily.
And there you go. It is holding the 20-day moving average. Oh joy! Yeah. Look at those are ranges for what?
For ants.
Ants.
This is just if you're a range trader, stay here. Don't go anywhere. Because again, you could sell it at 60.50, buy it at 59.50, and make $1 in crude for the past 3 days.
Until that changes.
Patterns are patterns until they break. Patterns are patterns.
All right, let's look at natural gas. I'm getting my headache looking at that.
Janish has a question. Where would you be looking to enter if you wanted to take the urgency trade? Great question. Let's find some urgency again here. We didn't get it in natural gas, so we might have to go back to one of the other markets that presented it. But natural gas on the daily. What are you seeing here? Getting closer.
So it didn't touch it, the 200. It got closer. Now, this is a continuation chart.
Mm-hmm.
On a non-continuation chart, it touched the 200. But we can't see that, so
okay.
I don't want to go into it. But still, we had a correction of this short covering rally. We're not close to a 3-bar reversal. Is this a dip to buy? Possibly. But let's look at, wow. So we had the Sunday night gap. I'm going to leave it to you because I can see where you were going with this.
So the Sunday gap, if you've never traded natural gas, it just does this all the time. And sometimes the gaps fill and sometimes they don't. Now, we gapped up, and if we look at the flow from that gap up, the flow never continued higher. Price did. And if you're wondering what I'm defining as flow, take a look at the VWAP, right? From that 30-minute opening range, the initial 30 minutes, which is this red box now, we never had VWAP. Nope, that's going to be confusing. Let's make this red again. We never had this red line leave that range. Price did, but volume didn't. And it got kind of heavy up here. Just came right back to the 200 moving average, which we've tested for the past 3 days. Now, what happens here is really interesting. We talked about this one during the opening call. What happens at this 200 moving average? Does, it's held three times already. Does it hold again? And we can see it. The flow for the day stopped at that 200 moving average. So price advertises lower. Does this mean just automatically jump in and buy it? It doesn't. But this, to me, is healthy for the upside of this market for now. Now, of course, anything can and will change. But we closed that Sunday gap, came back down to the 200 moving average, and price advertised lower, but volume never did. So really watching how this market responds here. Natural gas is a big mover. Today, it was up 1.39%, but this is high to low, about a 5% move. So more than enough opportunity in it. Who said it in the chat? Billy said couple of J trades on natural gas today. Looking at these lows around here, maybe on a shorter time frame. Let's take a look at like a 5 minute or something here. Oh, there it is. Look at this. Look at this. We did trade below the low, but close above this high. Some decent opportunity here. Seeing the volume get absorbed at these lows. And go ahead, Coach Paul.
Now, with that, looking at that half hour, it closed back above the 200. VWAP, like you said, did not get below the 200. We had huge selling. That was on one. What do you have? 1, 2, 3, 8 half-hour bars.
Yep.
So when that stopped, VWAP never went under the 200. Now, let's put a volume point of control. This is what I've been watching, like, see how I would flip. Let's start from last night's opening till the highs were made, the last high. Now, let's look at the volume point of control. So if I'm looking at it there, it looks pretty good. Now, when we close below it, it's wow. Now let's do it till we get to the low of the day, the first low under the 200. Still, so that volume, most of the volume has been towards the highs. I can almost see why this was like, it's not time to buy.
Right.
Or cover even. On a longer, so let's move it forward again. Now, look what happened down here. Volume. So we're getting more volume at the lows. Why? Because there was huge selling volume, and we could almost use this with a J trade.
Mm-hmm.
Like, at what point did it flip? And if it closes above that flip and the 200, I think there's opportunity tonight to look to buy that. Just because we had this massive selling. I mean, it filled the gap. Did we hold yesterday's low? What was yesterday's? Let's look at yesterday's volume point of control. Okay, now let's bring up a volume profile from yesterday. All right, your volume point of controls, people work with Coach Ray. Where was the value area from yesterday or Friday?
Right at these lows. We looked below value. Volume didn't trade below value.
This to me is pretty friendly. That's something I'm going to put on my radar.
Absolutely. I think natural gas is coming into that season where it is way more interesting than crude oil to trade right now.
Yeah.
Way more interesting to trade than crude. Presenting a ton of opportunities. The yellow line is developing point of control. Developing value area is going to be these green lines here, but developing point of control is that yellow line. Really interesting stuff in this market.
Great insight.
We got,
And once again, I want to go back to this. It's markets develop. They start out with small, but as they develop, you get new information. And that new information is internal to the market. And if using that practice and understanding it can remove our human need to have certainty. Like, it's really important because it doesn't have to do what we think it does. Like here, want to get short, it's under the 200. All right. If I'm short there, just because it's under the 200, now I know if I look at volume, I'm probably going to need more than that. Why? If I just take it blindly, that's okay. But what's my risk? We'll do it until it closes above it. It's simple. But VWAP was above it. The volume value area from Friday was right there. And what's happening down here?
It's being accumulated.
It's being accumulated. It's slowing down. What is slowed down? The fire sale. So
Yep.
Just hope that helps people, our audience, have a tool to show how volume interacts with price to give us flow. Not a guaranteed trade.
No guarantees in these markets. We got a request to look at the euro. Looking at the euro here on a daily, under the 20 moving average, above the 200. You seen anything interesting here, Paul?
Yeah, it's held at 200 and it's curling back up. I really want it to close above the 20. I've been watching it. There was a really good trade. What was it, Wednesday? But it's slowing down up here. It needs a little work. If we have a trend line from the high, that last high right there, let's close above that trend line, and we tested it. Keep an eye on that. And it's now with that. Let's look at the half hour. At our 200. Wow, that was a nice to see that. Was that one Thursday or Wednesday night?
Thursday.
Yeah. Had a nice run through the 200. We're holding. It's curling. The shorter term moving averages are above that. Looks like it wants to go to the upside, but it's not. There's nothing here that gives me urgency. Now, we did have some high volume on the sell side. I think that was on the close. So, yeah, I looked for it at night on a night session for some urgency after the first half an hour, or frame out the euro open and see if we get some buying out of that. That's the way I would approach it. I'm kind of friendly to it.
Speaking of friendly, cattle prices just spiked back up again, went limit up.
Oh, yeah.
And I'm pulling this up because Janish asks, can we go over the urgency trade entry if we can? So what we're trying to identify here is, first, you identify the urgency, right? VWAP and price. VWAP, ideally what it is price closes outside the range. volume is outside of the range as well. And in this case, volume could have left that range a little bit better. But what I'm looking for is once we get confirmation of a candle close and volume either leaving that range or attempting to leave that range early, I want to get an entry as close as possible to volume. So sometimes what you're going to see is just it explode. If it trades up here, ideally at this point, I'm looking for a little bit of a pull back. Sometimes you get it, sometimes you don't. But I'm trying to get an entry as close as possible to VWAP, and my stop is going to go on the other side of the range, right? If it, when I see this trade set up, I think about Coach Paul saying, how close was your entry to volume, right? In this case, you can use a 1 minute. We talked about this last week, right? Using the 1 minute instead of the 3 minute in the ags. Candle close outside the range. VWAP is tilted to the upside. My job is to try to get as close as possible to VWAP with this entry, in my opinion, right? Some people might just say, hey, market in. The market's telling you it's going one way, accept the risk, which is fine as well because, with waiting for a quote unquote perfect entry, you may not get your trade. I'll tell you what I look at specifically. If I'm taking this 1 minute, this candle close is a confirmation. What I'm looking for is a test and rejection of acceptance back inside this range. So this candle right here would get me into this trade if I'm trading this correctly, right? Because this is the signal. Okay, the market is trying to do something. This is the second signal. The market is confirmed that it's done trading these prices. I'm long now. And I might just market in at this point when we get this test and rejection here. Anything you would add to that, Coach Paul, how you execute this trade?
Yeah, that's the 1 minute, right?
This is the 1 minute, yep.
Okay, now let's go to the 3 minute and keep that on there. Now let's frame out the 3 minute. All right, now let's frame out the 5 minute. What information are we getting? There's no selling in the first 5 minutes.
Right.
And VWAP is sloping up. So that also, what is the most common element in all three of those? The low.
Right.
I really, so if you are 1 minute, 3 minute, 5 minute, we add them together and we broke out. And who's in trouble now? By the way, it opened lower.
Right.
There was some urgency, but, and this is what you have to define your risk. Can you afford to take this trade? So let's frame it out. If I take this trade off the 1 minute into a new low, just simple, how much is it going to cost me?
Probably about $400 in this case.
Can you afford that? That's the least you can do.
Right.
Now, if you can't afford it, don't take it.
Yep.
Can't. I'd like to have a Maserati, top of the line, but I got a Ford budget.
Right.
So I'm not buying it. But the key point here is we're looking at the flow. This could be cattle. This could be gold. I want to get with the flow. It's really hard to swim against the stream.
Yep.
Doesn't mean you can't, but you better be pretty powerful. I'm lazy. I like to go with the flow.
It makes your job a lot easier when you can identify that flow and get in the flow of the market. It makes your job a hell of a lot easier. Sometimes we make it more difficult than it needs to be, but if you can identify flow, you can get in with the market. Here's another one. Here's the lean hogs today on a 1 minute. We close outside the range. In this case, volume took a little while, right? It looked like it was going to leave, but that's why we manage our risk, right? Risk would go, and this one was a pretty wide risk, talking about 1% after we got that closed, but the idea is the same. Now, again, like back to Coach Paul saying, can I afford to take that risk? It's not about the setup invalidating, because this setup never invalidated. We closed above that high. We never invalidated this trade. Is it too expensive for my account? You got to ask yourself that question. All right. Anything else we want to go over, Coach Paul? We are above time right now. We're at time. It's been a good session so far. We covered a couple of different markets, and it is only Monday. We got a lot more opportunity coming up this week. Anything else you got, Coach Paul?
As always, what we did right now was looking at trades or opportunities that we see. That's plan your trade, trade your plan. Part of that trading your plan is to predefine the risk. I'm going to leave it on here. If you don't predefine the risk, you are very vulnerable in your mind and your subconscious. You're not looking at the risk. You're not accepting it. If you don't have a stop and go, okay, this is where I'm in, this is where I will let it go, you're very vulnerable to ignoring it when it gets to be too big. And now I can't get the fuck out of it. Now I got to stay, now I got to stay with it.
That's usually what I say.
Yeah. And now I got to stay with it to be right. And because I can't afford to take this. Why did I take this? Damn it. I got to get out.
Yep.
All right.
Or I got to average up to get a better price to then maybe get back to scratch and break even. And I'm doing these mental gymnastics and trying to flip contracts. Like, how do you know this, Jay? You've been there before. You've done this before. We've all done it. We're all susceptible to doing it. So, like Coach Paul just said, establish the risk before you take the trade.
Yeah.
Before you take the trade, just accept it. You're going to be wrong sometimes. Vodka Net says, if you can't get the F out of it, you'll get taken the F out of it. And that is yep.
Very good. Yes.
Yeah.
And I'll leave it with thank you. And I'll leave it with that.
Let's leave it with that. Great session. I do not believe Coach Hoop is doing his class today in Discord, but we do have Coach Ray and Coach Vince 6 p.m. and 7 p.m. Central Time. Of course, Dakota with slow markets at 7:30. I'll be joining him there. After that, we got Aaron with the London Open, 1:30 a.m. Central, D with the Euro Trade, 3:30 a.m. Central, and we're back tomorrow with the opening call, 7:15 Central Time. Trade well, everybody. Manage your risk. If you haven't done so already, hit that thumbs up button on the way out if you like what we're doing here. And we will see you all tomorrow. Bye.
Bye.